This is not just another red candle on a chart. This is fear moving through the market like electricity. This is Bitcoin shaking hands with uncertainty, and every investor feeling it in their chest. If you woke up today wondering why the crypto market feels heavier, darker, and more dangerous than it did just weeks ago, you are not imagining it. Something real is happening right now, and ignoring it could cost you money. Bitcoin, the asset that once looked unstoppable after breaking into six figures in late 2025, is now trading far below that peak. From its October high near $126,000, Bitcoin has fallen by almost 50%. Today, prices are hovering around the $70,000 range after a violent sell-off that wiped trillions of dollars from the total crypto market. This is not a rumor. This is not social media panic. This is real money leaving the market. Over $2 trillion in crypto market value has vanished in a matter of weeks. That kind of destruction does not happen quietly. It shakes confidence. It forces liquidations. It exposes weak hands. And it reminds everyone that crypto does not move in straight lines, no matter how strong the long-term narrative sounds. Bitcoin attempted a short-term bounce today, climbing back above 70,000 after dipping lower earlier in the week. But this bounce does not erase the damage. Analysts are calling this Bitcoin's worst weekly performance since the 2022 bear market. Volume surged as panic selling accelerated, and derivatives data shows that billions in leveraged positions were wiped out across major exchanges. When leverage unwinds this fast, price moves become brutal. Ethereum has not been spared. ETH dropped below $2,000, losing between 20 and 40% in just days, depending on the exchange. For many investors, this level was psychological support. Once it broke, selling pressure intensified. Gas activity slowed, NFT volume cooled, and traders moved capital into stablecoins at record speed. This behavior tells a story. Investors are not confident. They are defensive. Major altcoins followed the same path. Solana, Binance Coin, and XRP all experienced sharp drawdowns before attempting weak rebounds. Meme coins collapsed even harder, some losing over 60% in a single week. Liquidity dried up fast. Bid walls disappeared. When markets fall together like this, it is not about one project failing. It is about sentiment breaking. The question everyone is asking is why this is happening now. The answer is not simple, but it is clear. Macro pressure is back. Rising uncertainty around interest rates, renewed volatility in tech stocks, and a global risk-off environment are pushing investors away from speculative assets. Crypto is still treated as high risk no matter how much adoption grows. Institutional behavior confirms this. Spot Bitcoin ETFs in the United States recorded heavy outflows this week. Funds that were once accumulating are now reducing exposure. That does not mean institutions are abandoning Bitcoin forever, but it does mean they are protecting capital in the short term. When big money steps back, price stability disappears. There is also political uncertainty weighing on markets. Policy signals out of Washington have become unpredictable. Discussions around regulation, taxation, and reserve strategies are creating confusion instead of clarity. Markets hate confusion. When rules feel unstable, investors hesitate. And hesitation turns into selling when fear rises. The Fear and Greed Index has dropped into extreme fear territory. Historically, this level has appeared near major bottoms, but it has also appeared during the middle of deeper crashes. Fear alone does not mark the bottom. Price structure and volume matter. Right now, the structure is fragile. On-chain data shows increased movement of Bitcoin from long-term wallets to exchanges. That usually signals selling intent. At the same time, miners have increased distribution, likely to cover operational costs during volatility. This adds supply to an already stressed market. Supply without demand pushes prices lower. Support levels are now critical. Many analysts are watching the $56,000 to $58,000 zone as a possible next major support for Bitcoin. If that range fails, downside risk increases significantly. On the upside, Bitcoin must reclaim and hold above 75,000 to restore confidence. Anything below that is still damage control. Despite all of this, not everyone believes the bull cycle is over. Some analysts argue that this is a violent correction within a larger long-term uptrend. Bitcoin has survived deeper crashes before. In 2017, it dropped over 80%. In 2021, it lost more than 50% twice before making new highs. History shows resilience, but history does not protect you from short-term pain. What makes this moment different is the scale. Bitcoin is no longer a niche experiment. It is held by governments, corporations, and retirement funds. When it moves, it impacts everything connected to it. That means volatility is amplified by size. Bigger markets fall harder when sentiment shifts. Retail investors are feeling the pressure the most. Social media is filled with fear, anger, and confusion. Some are panic selling at losses, others are frozen, unsure what to do. This emotional response is exactly what markets exploit. Fear transfers money from the impatient to the disciplined. The truth is uncomfortable. Nobody knows the exact bottom. Anyone claiming certainty is lying or guessing. What we do know is that markets move in cycles, and this phase is a stress test. It tests conviction. It tests risk management. It tests whether investors understood what they were buying or if they were just chasing green candles. Right now, survival matters more than profit. Preserving capital is a strategy. Sitting in cash is a position. Waiting for confirmation is not weakness, it is discipline. The traders who last through this period will be the ones positioned for the next expansion. Bitcoin is not dead. Crypto is not finished. But the easy money phase is over for now. This is the phase where hype fades and fundamentals are questioned. This is where long-term believers are separated from short-term gamblers. The market will recover eventually. It always does. But it never rewards impatience. It never warns you before it drops. And it never cares how confident you felt at the top. Today's crypto market is a reminder. A reminder that risk is real. A reminder that volatility cuts both ways. And a reminder that the strongest investors are not the loudest ones, but the ones who stay calm when everything feels like it is falling apart. If you are still here, still learning, still paying attention, you are already ahead of most people. Because in moments like this, information is power, patience is protection, and discipline is survival.